Hello, everyone. My guest today is David Kyle. He's a software veteran, brings a growth-oriented leadership approach to his job today as CEO of QA Symphony. For more than 25 years, he's built a strong track record of business success. Before this company, he was CEO at Digistrive, a provider of e-commerce solutions to large membership-based organizations. He sold that business to a large private equity company. Before that, he was CEO of Integrated Broadband Services, a software and services company. And during his tenure, the company doubled in size, completing 2 strategic acquisitions and established a market leadership position in the tier 2 broadband space. David, are you ready to take us to the top?
Yes, Sam. Thank you.
All right. Yeah, we had a lot of fun, I think, last time when you came on, which was back in, January, February, March? It was April of this year, so a couple months ago. But you guys at that point had passed, I think, $1.6 million in MRR. You had about 570 customers. You had about 100% year-over-year growth, and retention metrics look great. You had 115% net revenue retention annually, I think you said. You also have some news. You just merged. So walk us through first what you do for those that missed the first interview, and then let's talk about why the merger.
Absolutely. Thank you. QA Symphony is a SaaS company that sells software to large developers, large companies that have development teams and testing teams globally. Generally, it's Global 2000 focused. And what we do is provide a solution that really improves the speed and improves the productivity of developers and testers. Think of us as kind of a Salesforce solution, but for the development and testing group. And we have really focused on 3 primary verticals. Technology companies where we have customers like Cisco and Salesforce today, large financial services organizations, USAA, many big banks, the largest bank in Australia, and then a lot of retailers. So any organization that has an important web-facing website where they drive revenue, we've had many customers there, Amazon, Office Depot, many others. So we've been growing very quickly. The market's been exploding, and we continue to have nearly 100% growth year over year. We're about to hit that 20 million recurring revenue mark this month. We'll celebrate that in about 2 weeks, and so
that's exciting. And just for those of you listening later, because the episodes don't go live when we actually record them, but we're recording this here on Wednesday, August 8th. So it sounds like here in August they'll pass that beautiful 20 million mark.
Correct. That's right.
That's great.
So you had alluded to something that is public. On June 20th, we announced a very important and strategic merger with a company called Tricentis. So it's been a very exciting nearly 2 months now since that announcement. Tricentis is very complementary to QA Symphony, whereas we do focus on a test case management solution, more manual testing focused. Tricentis has multiple products, but has especially well known for their automated solution called Tosca, which is in the top quadrant at Gartner. And so we not ironically have the same investor. So Insight Venture Partners, which is one of the largest software investors in the world, have just recently raised a $6.5 billion fund, had been investors and continues to be investors in both organizations. So our board will remain essentially the same. And, we're coming together. We expect to close that deal legally in early September and come together as one cohesive company by the end of the year. David,
what was the spark that started that? Was it Insight at the board meeting saying, hey, you guys should look at this other company? David, if you like it, let us know. We can make an intro.
Insight played a key role, as you alluded to, and really there was interest both sides. So they saw that Tricentis was very strong in Europe, moving into the U.S., very strong in selling to the C-level, very strong with systems integrators. They saw that QA Symphony had almost all of its business in the U.S. and was trying to break into Europe, and that was an important growth area. That we were more selling into the user base and trying to move up, and so it was extremely complementary. And really what the big picture is, though, is the space, like many software spaces, is shifting away from kind of older, antiquated legacy software providers to more modern providers. And we believe as one company now, we are extremely well positioned to undoubtedly lead this space of overall software testing, which is a $35 billion market. Historically, you saw a very successful company called Mercury Interactive that was acquired by HP in 2006. HP has owned them ever since. HP merged with its software business with Micro Focus a year ago. And it's, again, public record that business has been declining very rapidly. So we're really well positioned to increase our market share each and every year and lead that category.
Now, David, I want to talk about the mechanics of an actual merger, what that means. But before, 2 months, about a month and a half before you announced that was when you were on our show. I want to make sure nothing drastically changed. Did you raise any additional capital, or you still have about $47.5 million in the company?
Well, we had raised 47.5, and Tricentis has been around longer and is actually a larger organization. So they've raised over 160 million.
Okay,
with Insight.
And to round out just some of your other numbers, team size still about 130 and still about 570 customers.
We're every month that number will go up. So we're at about 145 now employees, and about 648 customers as of this Monday.
That's great. Okay, great. And then, so walk me. I want to get into the mechanics of this because it's rare that we get someone right on the back of a merger, right? So when people think about should I merge with a competitor or someone in my space, maybe not a competitor, maybe something complementary, the first question is, especially from an ego perspective, is wait, are they going to be CEO or am I going to be CEO? Let's just start right there. How do you handle that question?
Sure. Very, very relevant question. Ultimately, what I have used as my guiding principles are some businesses, and one in particular that I worked at years ago. I worked at a public company called ChoicePoint, and I saw a model there that I really saw was very successful, where there was a CEO and a COO who were very complementary and terrific business partners. And I saw that combination, both of those guys, by the way, were terrific mentors of mine. I saw that combination was quite effective. So that same model is one that we've embraced here at Tricentis. The company will be named Tricentis when we close. And I will take on the COO role. And Sandeep is the CEO there. He has a background that's really unique. He was at HP and led the acquisition of Mercury back in 2006. So his knowledge of this space arguably is better than anybody else in the entire globe today. And he brings that history, that experience, as well as having started successfully many other software companies. He's out in Silicon Valley. I feel very lucky to have someone with his experience on the team, and his knowledge and his overall view here is invaluable to us.
And walk me through, so the combined kind of asset together, Tricentis plus QA, what I mean, revenue wise, we'll be above 100 million in ARR or no?
Yeah, I can't be specific given that we're private, but I think I can speak generally that we'll be approaching 100 million.
Well, you're 20. You already said you're about to pass 20, so I'm just trying to get a sense of together what it will look like.
Yeah. We're going to be in that 80 to 100 range.
Okay. Well, and the reason I asked that, David, is because, and sorry to cut you off, but the reason I asked that is because a firm like Insight knows very well that the multiplicative effects of a larger ARR company in terms of an exit, valuation, IPO, you get a better multiple. You're generally more healthy if you're at 100 million versus 20 million, right? So they know that, especially if they're going to go out and try and sell it to like a Vista or a private equity firm, right? So how do you make sure you understand any bias that Insight is bringing to the table as an investor in both companies?
Also for a living, and they're known as one of the most successful investors in the software space. So actually having their strategic views and reinforcement behind this is one of the things that gave me huge confidence that this was the right move, because they've had so much success in bringing companies like ours together to ultimately achieve a terrific outcome. For us at QA Symphony, it's not about ego. It's about ensuring that we're the leader in the space. We like to win, we like to have fun, we like to succeed and make an impact. And now this merger with Tricentis will put us even in a better position to do that longer term.
DevOps is a hot space. We've had, the SmartBear folks came on recently, 7.5 million in monthly recurring revenue. Sauce Labs, I'm sure you probably know Charles well. Then there's others that don't compete directly with you, but Cloudability, CloudCheckr, all doing 20, 30 million bucks in ARR. Is this merger the start of what might look like a much larger roll-up of some of these other tools as well, and this first merger is the hub?
I think that what you're noticing and pointing out is that there are many fast-growing and successful companies in this space that bring the newer technology and the more modern approach. And we're all really smaller players going after a huge pie, where you see the legacy providers like Micro Focus and IBM and CA struggling to maintain market share. And so I think that there are going to be room for multiple winners, multiple companies that grow. We don't compete directly with those companies in a meaningful way. In fact, we often see folks like Sauce as potential partners and complementary. The reason and the ecosystem can be quite complex, and the time here doesn't allow for that. But as you think about the entire end-to-end that a software developer and tester goes through in their entire daily approach to putting out excellent software very quickly, it involves multiple capabilities, and it's more than one company traditionally can do. So huge space, huge opportunity. Listen, we're growing as a collective company, in kind of the 70% plus. We see the market is wide open. We have no reason to believe we can't get to be $1 billion company, and I'm sure there'll be some others that also have a similar path.
David, just put directly, my simple question are more acquisitions in the future to drive additional growth in the space?
There's none planned today, and we feel like we've got the assets that can get us to where we need to be. You always want to be aware of other levers that drive growth, but right now between Tricentis and QA Symphony, and Tricentis made a couple of acquisitions earlier, a company called Flood that's quite strong, and some others, and so we feel like we've got the assets to win today.
Tell me about how you communicate this to your team. I imagine when you put out that initial press release, sometimes people see the upside. They say, yeah, it's going to be great. Others go, oh my gosh, am I going to have a job after the merger? How do you communicate this to the team?
Well, you're certainly correct in that mergers, many folks have experiences of mergers that often involve a lot of cost reduction. What we were able to say here with 100% confidence and credibility is that there was no cost reduction, that this is all about growth, that the teams are entirely complementary, and we literally are in a massive hiring phase and are not reducing any positions as a result of this. In fact, many folks on our team and on the Tricentis team are taking on significantly more responsibility from a global perspective, from an account ownership perspective. So there was certainly a lot of interest to understand the details. As we've gotten further into it, our team, has gone from somewhat excited to extremely excited because they see the power of the combined entities.
The 172 that Tricentis has raised, was all of that mainly from Insight, or were there any PE firms like Avista Equity taking a 10 or 20%?
I believe it was 165 that they did completely with Insight, and they had raised a little bit of money in an earlier round, well before that.
Interesting. Okay, great. Very good. Any things that surprised you as these conversations went down? And specifically, David, what I'm hunting and digging for here is people listening right now might be considering the same kind of thing. Is there anything they should be aware of that you weren't expecting going into this?
Well, as we all know, that folks that have done M&A is hard. And what I would tell you is what's really been critical to us is to have that global coverage, which we didn't have. But certainly now being a global company with offices in Australia and offices throughout Europe and offices in India, it's just much more complex. So I would say get ready to buckle in and make sure you've put the time in at home, because the travel is going to be extensive. But if you're someone who loves change and likes to win and likes to be energized, then this is the right move. And for us. And me personally, it's been incredibly energizing and exciting.
Do you look at things like, okay, how are our tech stacks going to be combined to offer a more comprehensive product, or will they basically still stay separate entities but all part of one organization?
No, we're absolutely going to combine the product strategy. We'll have a combination of the different aspects into one common platform, and we actually are going to launch the first phase of that combined entity at Accelerate in October, which is Tricentis' annual user conference. I believe it's the second week in October. So for those that are interested, make it to Vienna. I think it's October 7th, and that's where they can learn a lot more about the combined product strategy.
What happens to the investors on your cap table that are not Insight Venture? So people on your cap table that are not on Tricentis cap table, what happens to them? Do they get a payout? Is their money changing hands in this merger?
In this case, all of our institutional investors have been extremely excited to remain with the company and feel very confident. So they've rolled their investment forward, and that's been they view it as a very positive event.
Was there additional capital raised on the Tricentis side to fund any aspects of this, or it really was a no cash exchange merger?
No cash. Tricentis had significant cash on their balance sheet from raising money 2 years ago, so that was not a need that we have at this time.
My point was, sorry, they're not paying you guys, I'm making this up, $40 million to buy the company. This really is a merger. It's a stock deal.
Correct.
Okay, got it. Interesting. Very good, David. Let's wrap up here with the famous five. Number one, what's your favorite business book?
Gosh, I still like probably, I would say either Good to Great or Crossing the Chasm. Crossing the Chasm. Yeah.
Crossing the Chasm was a good one. That was you're consistent.
Oldie but goodie.
I was gonna say you're consistent. That's the same one you said last time. That's good. Number two, is there a CEO you're following or studying right now?
I follow Bezos. He's by far to me the number one CEO. Although the new CEO over at Microsoft is incredibly inspiring, so I'm starting to follow him as well.
Number three, David, what's your favorite online tool for building your business?
it's, as I mentioned last time, LinkedIn by a long shot.
Number 4, how many hours of sleep are you getting every night?
I think I said 7. Now it's down to 6. I think I lost an hour.
The merger will do that to you. And what's your situation? Married, single, kiddos?
Been married for almost 23 years. I got 2 teenagers, a son 18, a daughter 15. So a lot of people that have teenagers can feel my pain.
And how old are you, dude?
54 years old.
54. Last question. What do you wish your 20-year-old self knew?
What a great question. I think that to continue to really travel more. Every time I did travel outside the country back then, I look back at that as, amazing experience, and I wish I had done, 3 times as much.
Guys, travel more. He's going after the DevOps space. It's a multi-billion-dollar industry. He made the decision with his board recently that a Tricentis merger would make a lot of sense. They're about to pass QA Symphony is about to pass $20 million in ARR across 648 customers, 160 employees, and the team's growing rapidly again as they work this year to complete this merger. The combined entity call will be due between 80 and $100 million, gives them more international exposure. He'll be traveling more, but again, they're going after a much bigger pie. David, thank you for taking us to the top.
Thanks for having me, guys. Appreciate it.